The spotlight was cast over the Congressional hearing room, illuminating Jerome Powell's composed expression as he adjusted his tie. For nearly 2 hours, the Federal Reserve Chairman had been fielding easy questions, his confidence unbroken. Then the turn came for Congresswoman Jasmine Crockett. Leaning toward her microphone, the freshman representative from Texas locked her focused gaze on Powell. "Mr. Powell. I've listened patiently as my colleagues avoid the obvious," she began, her tone calm yet firm. "Today, I will ask one direct question regarding the $6 trillion 0-cents decision made by your Federal Reserve. A question that no one else has dared to raise." A flicker of unease passed across Powell's face. The room grew still. Staffers looked up from their phones, and reporters leaned in with interest. Prepared and armed with stacks of documents few others had examined, Crockett had arrived. For weeks, she had studied obscure Federal Reserve data and economic reports most had overlooked. "Mr. Powell," she continued, lifting a highlighted document. "This evidence demonstrates that the Federal Reserve's policy wasn't just flawed. It was disastrously wrong, and I believe today is when you finally acknowledge that before the American people." Adjusting his microphone, Powell showed tension in his posture. He hadn't expected such a challenge, particularly from a freshman congresswoman. But Jasmine Crockett was no ordinary representative. She was a seasoned civil rights attorney, known for taking on powerful institutions and winning. The air in the room grew charged with anticipation. This would not be another routine hearing. It was about to become a defining moment for the financial establishment. Voiceover in one paragraph. Before we continue unpacking this pivotal exchange, remember to like this video and subscribe to our channel for more in-depth political analysis and breaking stories. Now, let's see how Jasmine Crockett challenged one of the most powerful figures in American finance. Embodying decades of establishment authority, Jerome Powell sat confidently at the witness table. At 71, the former investment banker and current Federal Reserve Chairman projected steadiness and control. His charcoal suit and simple tie reflected the seriousness expected from someone guiding the nation's monetary direction. For years, Powell had handled congressional hearings with ease. His measured tone and technical language often diffused criticism. "The Federal Reserve remains committed to price stability and maximum employment," he had stated earlier, his voice steady and authoritative. "Our policies have helped guide the American economy through extraordinary challenges." Financial journalists nodded in quiet agreement, typing notes about another predictable hearing. On Wall Street, executives watched calmly, assured that their interests were secure. For 6 years as Fed chair, Powell had earned respect from both parties, using detailed explanations and appeals to institutional independence to deflect tough questions. Across the room sat Congresswoman Jasmine Crockett, 43, representing Texas's 30th District. Despite being relatively new to Congress, she had already made a mark with her detailed preparation and refusal to accept vague responses. Before politics, she was a respected civil rights lawyer known for her persistence and courage in the courtroom. "I'm not here for political theater," Crockett had told her staff the night before as she reviewed financial documents past midnight. "I'm here because ordinary Americans are struggling while economists debate theories. Someone has to hold the Fed accountable." The stakes were enormous. For years, inflation had battered American families. Grocery prices were up 25%, housing was unaffordable, and wages lagged behind. While the wealthy managed to protect their assets, working families were being squeezed. Recent studies suggested the Federal Reserve's $6 trillion 0-cents policy had deepened economic inequality while failing to deliver its intended results. In her congressional office, Crockett had spent weeks dissecting those reports, determined to bring clarity to an issue with profound impact. Pinned on her office wall were letters from constituents, a retired teacher struggling to afford medication, a young family priced out of buying their first home, and small business owners overwhelmed by rising costs. "These are the people who need real answers," Crockett reminded her team. As Chair Powell concluded another vague response to a committee member, Crockett quietly reviewed her notes. Unlike others who arrived with talking points drafted by staff, she had personally spent weeks studying Federal Reserve data, consulting independent economists, and identifying inconsistencies in Powell's previous testimonies. "The gentlewoman from Texas has 5 minutes," announced the committee chair. Taking a calm sip of water, Powell was unaware that Crockett had uncovered what even financial journalists had overlooked: internal Fed reports predicting the damaging outcomes of their own policies, reports that had been ignored. Thank you, Mr. Chairman, Crockett began, her voice steady and clear through the chamber. Mr. Powell, I'd like to address something specific today, the Federal Reserve's $6 trillion intervention in the markets between 2020 and 2022. Powell nodded slightly, expecting familiar questions about inflation or interest rate decisions. Would you agree? Crockett asked, that the primary mission of the Federal Reserve is to maintain price stability and ensure maximum employment. Yes, Congresswoman, that's correct, Powell replied, appearing more at ease. Crockett tapped her tablet, displaying a chart on the chamber's large screen. This graph shows the unprecedented expansion of the Fed's balance sheet to nearly $9 trillion. An extraordinary level of intervention, wouldn't you say? These were extraordinary times that required decisive action. Powell responded smoothly. Our models indicated, about those models, Crockett interjected, handing a document to her aide, who promptly delivered it to Powell. This is an internal Federal Reserve memo dated March 2021. It's labeled confidential, but my office obtained it through a Freedom of Information Act request 6 months ago. Murmurs swept through the room. Powell looked down at the document, his expression tightening. This memo, written by your own economic advisors, clearly warned that continuing asset purchases at this rate would likely result in sustained inflation exceeding your 2% target. Yet purchases continued for another year. Can you explain why? Crockett asked. Leaning forward, Powell chose his words with care. Congresswoman, policy decisions involve balancing multiple factors. At that time, we believed the risks of doing too little were greater than the risks of doing too much. So, you were aware of the inflation risks, Crockett pressed. We recognized uncertainties. Yes, but Mr. Powell, Crockett interjected, signaling to her aide. Another document appeared on the screen. This is the transcript from your closed-door meeting with major bank CEOs in April 2021. You said, and I quote, inflation concerns are likely transitory and will normalize within quarters, not years. Did you believe that when you said it? The room grew tense. Powell's sworn testimony now had to align with his prior remarks. At that time, yes, based on the data we had, Powell replied. Crockett nodded slightly, her expression unchanged. Let's look at what your own researchers told you. She revealed another document. This report from your San Francisco Federal Reserve branch explicitly warned that supply chain disruptions combined with excess liquidity would create structural inflation resistant to traditional monetary tools. This was presented to the Federal Open Market Committee in February 2021, before your assurances to those bank CEOs. Powell's face stayed composed, but his grip on the pen tightened. Congresswoman, forecasting is not an exact science. Different models led to differing outcomes. I understand forecasting is challenging, Crockett replied evenly, but I'm not asking about projections. I'm asking why you ignored warnings from your own experts after the data contradicted your public statements. The committee chair glanced at the clock. The gentlewoman has 2 minutes remaining. Crockett nodded and lifted a thicker document. Mr. Powell, I have the minutes from 5 consecutive Federal Reserve meetings where your staff economist presented data showing that ongoing asset purchases were fueling bubbles without improving employment. Yet each time, the Fed voted to continue the program. She leaned forward. My question is simple. Why did the Federal Reserve ignore its own research? Powell's jaw tightened. Congresswoman, monetary policy requires weighing complex factors. We made the best choices with the information available. The information available included explicit warnings from your own economists, Crockett countered, which you chose to disregard. She turned another page. Let's address the distributional impact. Your research department published this paper, she said, holding it up. It shows your policies disproportionately benefited the wealthiest 10% of Americans while offering little to working families. Was that an acceptable outcome for the Federal Reserve? The hearing room fell silent. Financial reporters typed quickly as members from both parties leaned in. The Federal Reserve does not target specific distributional outcomes, Powell responded, his tone tightening. Our mandate is overall economic stability. Yet your economists warned this level of intervention would create instability, Crockett replied. Which brings me to the central question. She paused, meeting Powell's eyes. Mr. Powell. Did the Federal Reserve make a $6 trillion mistake that harmed ordinary Americans while enriching the financial sector and the wealthy? The chair began to interject, but Crockett continued, "Before you answer, I should note that my office has compiled a detailed timeline comparing your public remarks to internal documents. It shows a consistent pattern of the Federal Reserve saying one thing publicly, while your internal data indicated something else entirely." Powell glanced at his aides, who looked increasingly uneasy. "The gentlewoman's time has expired," the chair said, "but the witness may respond." Clearing his throat, Powell saw his composed image hanging in the balance. Admitting fault risked political fallout, yet denying documented facts would damage his credibility further. "Congresswoman Crockett," he began, his voice less certain, "monetary policy involves difficult trade-offs." "That's not what I asked, Mr. Powell," Crockett interrupted despite her time ending. "Did the Fed make a $6 trillion mistake? Yes or no?" The room fell completely silent as Jerome Powell sat motionless, the weight of her question hanging in the air. Every eye in the hearing room was fixed on the Federal Reserve chairman. He looked down at the stack of documents Representative Crockett had cited, internal memos, economic reports, and meeting minutes revealing a troubling narrative. "Mr. Powell," the committee chair prompted, "please respond to the Congresswoman's question." Adjusting his microphone, Powell saw his composure slip. "Monetary policy decisions are complex," he began, but his usual confidence had faded. "In hindsight, there were miscalculations in our approach." Crockett leaned forward. "Miscalculations, Mr. Powell? Your own economists repeatedly warned you about the consequences. These weren't miscalculations. They were ignored warnings." She held up another paper. "This memo from your research division dated July 2021 states, and I quote, continuing asset purchases at current levels risks creating inflation that will require aggressive contractionary measures to control." Your team predicted exactly what happened. Powell's face tightened. He glanced at his aides but found no assistance. The evidence was displayed clearly on the committee screens. "Congresswoman," he said finally, with the benefit of hindsight. "Yes, the scale of our intervention exceeded what was necessary to achieve our goals." A murmur rippled through the chamber. Crockett pressed further. "So, you admit the Federal Reserve's $6 trillion intervention was excessive?" Powell inhaled deeply. "The magnitude of our response." He paused, searching for words. "Yes, it was excessive relative to what was needed." The admission sent shockwaves across the room. Reporters typed rapidly, and several committee members leaned forward in disbelief at the rare concession. Crockett continued, undeterred. "And this excessive $6 trillion intervention, who exactly benefited from it?" "Mr. Powell, our policies were intended to support the entire economy," Powell replied, trying to regain control. "That's not what your own research indicates," Crockett countered, signaling her aide to project another document. "This Federal Reserve study concludes that 72% of the benefits from your asset purchase program went to the top 5% of wealthiest Americans, while the resulting inflation disproportionately hurt lower-income Americans. Is that correct?" Powell swallowed hard. "That analysis does indicate a distributional impact, which was not our intention." "Not your intention," Crockett pressed, "but your economists predicted it before you extended the program for another year." Powell's tone hardened slightly. "Congresswoman, we were operating under unprecedented circumstances." "Mr. Powell," Crockett interrupted, her voice calm yet firm. "The American people aren't interested in excuses. They want to understand why the very institution tasked with maintaining economic stability caused the worst inflation in 40 years, while the wealthy gained the most." She opened another folder. "Your own San Francisco Fed published this paper showing that your policies caused home prices to rise 23% faster than they otherwise would have, locking millions of first-time buyers out of the housing market. Was making home ownership unattainable for an entire generation part of your mandate?" Powell's composure broke. "No, Congresswoman, it was not," he admitted, his voice strained. "And yes, with the information we now possess, the scale of our intervention was a mistake." A collective gasp echoed through the room. Jerome Powell, the unflappable Federal Reserve chairman who had never acknowledged a major misstep, had just admitted to a $6 trillion policy error under Crockett's questioning. "To be clear," Crockett said, her voice cutting through the stunned silence. You're acknowledging that the Federal Reserve made a $6 trillion mistake that fueled inflation, deepened inequality, and primarily benefited the financial elite. Powell closed his eyes briefly. When he reopened them, his tone was resigned. The data suggests our response was excessive and had unintended consequences that have been difficult for many Americans. Yes. The chamber erupted. Lawmakers from both parties began talking over one another as financial reporters rushed to file their stories. The chairman struggled to restore order. Amid the commotion, Crockett and Powell exchanged a steady glance. She had done what few believed possible, compelled the Federal Reserve chairman to admit a historic blunder that affected every American household. Powell's reputation for precision and control lay shattered before the committee. Order. Order. In the committee, the chair shouted, striking the gavel until the room quieted. We'll take a 15-minute recess. As members shuffled papers and aides whispered frantically, cameras captured the defining contrast that would dominate headlines for days: Jerome Powell, pale and shaken, gathering his notes with trembling hands, and Congresswoman Jasmine Crockett, calm and composed, methodically arranging her documents. The nation's most powerful financial figure had just admitted to a $6 trillion misjudgment, and it was a first-term Congresswoman from Texas who had exposed it with disciplined research and unflinching resolve. Within minutes of Powell's unexpected admission, global markets reacted sharply. Trading terminals across Wall Street lit up with red alerts as the Dow Jones fell 450 points in less than an hour. Bitcoin, meanwhile, jumped 8% as investors rushed toward alternatives to traditional finance. CNBC cut to a breaking news segment: Fed Chair Powell admits $6 trillion policy mistake. In the corridors of Congress, Representative Jasmine Crockett was immediately surrounded by reporters shouting overlapping questions. Congresswoman Crockett, what triggered your investigation into the Fed's internal records? Are you calling for Powell's resignation? How long had you planned that questioning? Crockett raised her hand for calm. Today wasn't about headlines or theatrics, she said evenly. It was about accountability. For 3 years, Americans have been told inflation was beyond our control. What we discovered today is that the Federal Reserve had clear warnings about the risks and ignored them. Across Washington, phone lines buzzed nonstop. The Treasury Secretary called an emergency meeting. The President's economic team convened in the West Wing to prepare a response. On Capitol Hill, both Democratic and Republican leaders scrambled to frame their positions after Powell's revelation. When Powell returned after the recess, he appeared visibly shaken. His aides had spent the break in frantic damage control, but the words could not be undone. As questioning resumed, committee members, now armed with documents from Crockett's investigation, pressed him further. Mr. Chairman, began a senior Republican, if your own economists warned you about inflation risks, why did you continue telling Congress it was transitory? A Democratic representative followed up. Given what we've learned today, how can the American people trust the Federal Reserve when it disregarded its own experts? As Powell struggled through the remainder of his testimony, financial networks split their screens between the hearing and plummeting market charts. Former Fed officials appeared on air expressing disbelief. In my 30 years following the Federal Reserve, said one former governor on Bloomberg TV, I've never seen a chairman acknowledge an error of this scale. The consequences are massive. By nightfall, hashtags like #6 trillion mistake and #Crockett exposes Fed were trending nationwide. Clips of Crockett's questioning amassed millions of views across social media. Analysts released emergency advisories for investors. Ordinary Americans shared how inflation had eroded their savings and everyday purchasing power. The next morning's headlines told the story clearly. Wall Street Journal, Powell admits Fed's $6 trillion misstep. New York Times, Fed chair concedes major policy error, markets plunge. Washington Post, how Representative Crockett cornered America's most powerful financial figure. On CNBC's Squawk Box, economists debated the fallout. The Fed's credibility is badly damaged, one expert explained. Powell essentially admitted they ignored their own analysis to maintain policies that enriched financial markets while creating the worst inflation in decades. Back in Dallas, Crockett hosted a virtual town hall with record attendance. What happened yesterday wasn't just about interest rates, she told constituents. It was about who our economy truly serves. For too long, working Americans have been told to trust institutions that haven't earned that trust. The Federal Reserve hastily scheduled a press conference to contain the damage. "My comments yesterday have been somewhat mischaracterized," Powell began. But reporters immediately pressed harder. "Chairman Powell," a Reuters journalist interjected, "you acknowledged a $6 trillion policy mistake. Are you retracting that? The documents Congresswoman Crockett presented show your economists predicted this inflation. Did you review those warnings at the time?" Powell's responses only deepened public skepticism. By the end of the day, lawmakers from both parties were calling for his resignation. Inside the White House, senior advisors debated the political cost. "Powell's term ends in 8 months," noted the chief of staff. "The question is whether he can last that long." Bond yields spiked as investors reassessed government risk. Global central banks issued statements reaffirming their own commitment to price stability, seeking to distance themselves from the Fed's blunder. On Wall Street, a prominent hedge fund manager who had long warned about the Fed's strategy appeared on financial television. "This confirms what many of us have said for years," he declared. "The Fed engineered the biggest financial bubble in history. And now the truth has caught up. Trillions flowed to the already wealthy, leaving working Americans to bear the cost through inflation." The only surprise was that Powell openly acknowledged it. Former Treasury Secretary Larry Summers responded, stating, "The Federal Reserve's credibility is its most important asset." Yesterday's admission raises serious questions about its decision-making and transparency. A week later, the Senate Banking Committee announced special hearings to review Federal Reserve oversight, while the House Financial Services Committee created an investigative subcommittee with Crockett named as vice chair. Financial reporters who had long accepted the Fed's explanations without scrutiny now faced criticism for their complacency. Major outlets quickly formed investigative teams to examine the Fed's internal communications and decision-making process. Across universities, economics professors updated their syllabi to include what was already known as the Crockett hearing, a case study in monetary accountability. 2 weeks later, Jerome Powell announced his resignation, effective immediately. In his letter, he admitted communication failures but avoided repeating his statement about the scale of the Fed's error. The president nominated a respected economist recognized for her commitment to full employment and stronger financial regulation. During her confirmation hearing, she emphasized understanding how monetary policies affect different groups and pledged more transparency. At the International Monetary Fund's annual meeting, central bankers worldwide faced similarly tough questions. The governor of the Bank of England was pressed in Parliament about whether similar mistakes had been made. Meanwhile, the European Central Bank announced a full review of its asset purchase programs. 3 months later, Congresswoman Jasmine Crockett sat in her office reviewing the Federal Reserve Accountability Act, a bill she co-sponsored. The proposed law required the Fed to publish analyses showing how its policies affect income distribution, to include labor and consumer voices on advisory boards, and to enforce stricter ethics rules for its officials. "This isn't about one hearing or one statement," she told her staff. "It's about changing how our financial system operates and who it truly serves." Behind her hung a framed Dallas newspaper front page from the day after the hearing. The headline read, "Texas Representative Changes Federal Reserve Forever." A new economic consensus was taking shape, one that recognized monetary policy not as a purely technical tool, but as a force that could either deepen or reduce inequality. And it had all begun with one congresswoman asking a single, pointed question. As markets steadied and the new Fed chair implemented reforms, public understanding of economic policy began to shift. Financial news networks that once treated Fed announcements as untouchable now featured more diverse expert opinions. Congressional oversight became sharper and more bipartisan, with lawmakers demanding clarity rather than deferring to the Fed's authority. 6 months after the hearing, inflation had eased without triggering the widespread unemployment many predicted. Economists credited the new Fed leadership's balanced strategy and clearer communication for the improvement. During a speech at a community college in her district, Crockett reflected on the transformation. "One question changed how we talk about who our economy serves," she told an audience of students and working families. But real progress came from ordinary Americans who refused to accept that economic hardship was inevitable. As she closed her remarks, Crockett smiled and said, "The story of our economy isn't written by central banks or financial elites. It's written by all of us, demanding a system that works for everyone." The audience stood in applause, their cheers filling the room. The freshman congresswoman from Texas had not only exposed a $6 trillion policy failure, she had helped steer America toward a fairer economic future. Thank you for watching this remarkable story of how one determined representative reshaped financial accountability with a single question. If you enjoyed this video, please like and subscribe for more in-depth political and economic analysis. Share this video with anyone asking why the cost of living has soared in recent years. Until next time, stay informed and remember, accountability matters, especially for those in power.